Today, we're going to cover three top stocks that the billion-dollar fund managers are buying, and they're also in short-term and long-term uptrends. I'm really excited. Let's dive in. My name is Scott Bennett, founder of Invest with Rules, where it's our mission to help you make money in the market, protect yourself. And how we do that is we follow trends, we follow big money, and most importantly, we follow a lot of risk management rules. Today, market update. We're going to cover the top $3 billion fund manager stocks. Kind of usually members like to give stocks to me once a month. And I want to actually kind of go through our watch list at the very top of it on the stock side today. So before we jump into that, I just want to share I was a guest on the Investing with IBD podcast. I had an awesome time with Justin. I'm a huge fan of Investors Business Daily. We'll actually look at some market surge charts later in this segment. But if you have time, go to YouTube. I'll submit a link so you can check that out as well. I'd love for you to check it out, give a like. Thanks so much for doing that. So Friday, you've made it through the week. It's November 22nd. It's the morning. And very simply, the market, if we judge it on the market health score, a 10 is an incredibly strong uptrend. A 0 is a miserable downtrend. We're on a 9. So the market is still screaming at us that the market is really strong. We're in an uptrend. We're kind of politely in the left-hand lane of the highway going pretty fast. The trend roadmap. It's our Invest with Rules way to kind of decipher any moving ticker, whether it's a stock or an ETF. And at the top line, we take a great homage to Stan Weinstein in his great book, The Secrets for Profiting in Bull and Bear Markets. And there's 4 stages. And very simply, we want to deploy a lot of our capital in stage 2, where we have a short-term and long-term uptrends. And when there's a short-term and long-term downtrend, we want to be really cautious. We want to play a lot of defense. And that's just not where we are today. So very simply, we look at signals, we look at trends, and whether you're more of a shorter term investor or a longer term investor, that's how you can kind of interpret how this will work. So let's go through it. So the S&P 500, definitively with math, not my opinion, is in a short term and a long term uptrend. To us, short term, I guess in our proprietary way, is saying between days and weeks, things are looking really good. The long term is looking at, think of it like weeks to months, trying to be thinking longer term. That's also looking good. So 2 uptrends. It's not extended. It's not overheated. You'll see that right after the election on November 5th, we got our gas signal and off we went. We were already in this position. We held through this coast signal because we tend to be a little bit longer term focused when we have gains. So it had 2 overheat signals and it pulled in and it's still looking really appealing. Obviously, please manage your risk, but the S&P 500 short-term, long-term uptrend on a gas signal, so things are looking really strong. If you want a ticker tool, specifically the S&P 500 ticker tool that you just saw, if you're a member, reach out to us at hello@investwithrules.com. But if, let's say, you're thinking about becoming a member, definitely try the free ticker tool. Sign up at investwithrules.com, but members get a ticker tool where they can put in any ticker they want. Stock, ETF, it will give you the results. So let's jump back into the market. So at the bottom, we're going to look now at the health of the market. So off to the far left is relative strength. What's really strong? And to the far right is relative weakness. And the S&P 500, I'm going to move my mouse to, is on a gas signal we talked about. It's a short-term volatility adjusted momentum. So not only do we want stocks to go from bottom left to top right and do extraordinarily well for us, but we also don't want the most volatile things in the world. So we take rate of change, how things are doing performance-wise, we divide it by its average true range to get a short-term volatility adjusted momentum of over roughly a month. And very simply, the S&P is a 1.8. So anything over a 1.8 has been outperforming, including volatility, the S&P. So off to the far left, consumer discretionary, think Tesla, XLE and XLF. In full disclosure, we have positions in XLE and XLF. They're in overheat, so it tells us to it's done nothing wrong. We're riding the trend. It's in an uptrend. Things are going great. All the way to the far right, we have a minimum position in full disclosure VEU. We've drastically pared that back. We have a very tight trailing stop on that. We don't own healthcare. We don't own materials, but those have been, over the past month, really underperforming the overall stock market. Let's get into the top 3. So we have this universe of stocks. We look at what these billion-dollar fund managers are up to, and then we apply our trend roadmap trend analysis. So kind of back to the thesis, I've done some past videos if you want to check them out. But very simply, what we're trying to do is we look at a roughly $1 trillion of assets, and we're looking at specifically fund buying. That helps shrink our stock universe down. We're also looking at earnings growth, and we're looking at volatility adjusted momentum to try to, our data is always on the 30-day lag at the end of the month. So very simply, we refresh this once a month. So we're trying to figure out, okay, over those 30 days, in most cases, we're either 15 days, 45 days, or 75 days ahead of the curve. How do we kind of figure out those last 30 days that we want to ethically kind of get to the best names possible? That's our process. And we're simply looking for short-term and long-term uptrends. So let's go through stock number one that's on our radar. Full disclosure, it's on our watch list. I don't own it, but this is how I would think about it. And maybe it hopefully helps you. Number one, GE Verona, energy to change the world. So very simply, this is a spin-off from GE, ticker symbol GEV. This is a market surge chart from Investors Business Daily. I use it. I'm a subscriber. I am not an affiliate, but we just personally like it, and we think it's great data. So triple-digit earnings, pretty incredible. No wonder why the stock's done this. Single-digit to double-digit sales, $95 billion enterprise value. This is a weekly chart of market surge. Things are going in the right direction. Obviously, it's gone up a lot. You have to be cautious and always manage your risk. Let's look at a FinViz daily chart, and I personally drew a box. If it breaks out, you have my interest. If it breaks down, defense. So we always, before we enter an investment, we always know our unit of risk and we always abide by it. Do not let things get out of hand. Please don't ever blindly buy a stock, not have some sort of a stop or a trailing stop, and then wake up and you just got crushed. Please always mind your risk and your risk tolerance. Here is an Invest with Rules GEV trend roadmap chart over the past 60 days. So now we're going zooming in even more. Why is this number one on our list? Well, number one, it's really ranked based on short-term volatility adjusted momentum. The funds are buying. Number 4 out of 46. So this is where the funds are going after. It had a gas signal back in August into early September. It's been on this massive overheat, amazing run, and finally it's cooled off and it's forming a base. And very simply, it's on a gas signal, a short-term and long-term uptrend, not necessarily extended. It's getting close, but not necessarily extended in our mathematical approach. Up 1.6% today. So on our radar is GEV. Number 2, American Express, AXP. So American Express, here's a market surge chart. You have in the neighborhood of double-digit earnings this year. Next year, possibly single digits or high single digits, somewhere in the neighborhood of single-digit sales. If the market keeps holding up, in theory, this is where the financials are. We have a lot of exposure in financials at the moment, but here's the market surge chart. The earnings just kind of keep moving forward, which is really good. A $210 billion enterprise value, as we know them as a credit card, travel-related service to customers worldwide. Here's a daily chart of AXP. In full disclosure, we have not only one, but in some cases, 2 positions of AXP. I drew a horizontal orange line on another breakout. If people like buying breakouts, we use our trend roadmap analysis, and here it is. So very simply, you can kind of see down here, we got a gas signal on 9/11 and off it went, and it pulls in, gave a little bit of a cautionary coast signal. And then on October 28th, back it went again. There's your election jump. Overheat, it pauses. You kind of see over here, overheat, it pauses. It's on a gas signal. We have it. This is a position that we, in full disclosure, we do own. This is something that's on our both the newsletter and our advisory service. It's number 21 out of 46. So the $1 billion fund managers are there. The trend is there. That's why it's number 2. And from a short-term volatility adjusted momentum, it's doing really well. We also filter things based upon our short-term risk units. If it's drastically extended, then we have a process for that. Finally, number 3, Howmet Aerospace. So maybe you're familiar with this, maybe you're not. It's a pretty serious growth company, $47 billion enterprise value. They provide engineered materials and metal products specifically for the aerospace and transportation industries. This is, what a beautiful market surge chart, a weekly chart of the earnings just accelerating. Double-digit earnings, single-digit sales, but they're still doing extraordinarily well. Here's my personally annotated daily chart, and I drew a line where it just needs to hold above on the short-term perspective, a horizontal yellow line, and this is kind of the low of the gap up after earnings is kind of my line in the sand, is something I'm watching as well. This is on my watch list. I don't own it, but I'm very interested in Howmet Aerospace, HWM. And finally, here's the trend roadmap chart on a gas signal, which is great. Short-term, long-term uptrend, not necessarily extended. Number 5 out of 46. So the funds are going after Howmet, meaning that they're accumulating shares. Very simply, this falls into our process. So again, we covered GEV, we covered AXP, we covered Howmet, we covered some of the market. If you have questions, reach out to us. We have intentions to open the membership at the end of the month. We have a couple more tinkers to do for our members, but we're here for you. We'd love to create a long-term partnership and for you to have great information. That's really important to us. Again, thank you so much for your time. I hope you have a great Friday, a great weekend. Thank you for joining us on this short video, and we'll see you on the next one. Talk soon. Bye-bye. So I hope this helped you kind of identify some either uptrends or things coming to uptrends, but please always do your due diligence, manage your risk tolerance. This is not a direct solicitation, just things for your watch list. I hope it was helpful, and I'll see you at investwithrules.com. Thanks so much.